Are harsh auto tariffs a preview of the targeted announcements coming next week? Well, that flexible tariffs optimism didn't last long. The White House announced 25% tariffs on imported vehicles as well as auto parts. These tariffs will go into effect midnight on April 3rd. After popping 2% to start the week on optimism, markets gave most of it back after the harsh auto tariffs were announced. So, what's the impact? Well, obviously, automakers are feeling it. To manage costs, many factories are specialized for certain parts or vehicle models. Large automakers have expansive production footprints to service global markets. These tariffs will require US manufacturing of both primary parts and assembly to avoid impact. In particular, General Motors is particularly exposed with a widespread North American manufacturing footprint. Unfortunately, that exposure will likely spread. Consumers are likely to bear the brunt of the costs. Analysts have estimated that the average car price could increase by about $5,000 to $10,000 each. In addition, the ecosystem could also see impact on car repairs and maintenance costs, as well as insurance. However, we can also see retaliation further compound the problem. Other countries like Canada and Japan have already vowed to fight back. We could see other countries retaliating with tariffs on assembly and parts made in the US and sent to them for sale, or even retaliate on goods outside of the auto industry. And then the US's response so far to any retaliation has been threats for harsher retaliation in return, which then can cascade into a trade war. So these tariffs were focused on the auto industry and were targeted, not broad. However, it's still harsher than the market expected and more encompassing within that industry. Investors seem to be taken by surprise that the tariffs included component parts as well. What was just a positive signal a few days ago has turned into a negative with a supposed barrage of more targeted tariffs coming next week. We see negative sentiment building with markets closing near the day's lows. When we might have had a small reprieve from the tariff drama last week, it seems it's back and will likely dominate market headlines going into and through April.